Hello and welcome to Ticker Tapes. It's Wednesday, which means it's time for a look at the crypto space. The stock price of Coinbase Global, the NASDAQ-listed cryptocurrency exchange, has been under intense pressure year to date and has fallen by almost 74% since January. Though not everyone is jumping ship. In fact, quite the reverse. Coinbase co-founder Fred Hersham recently bought 706,000 shares in the crypto exchange, a deal that represented an investment of a cool $50 million. This purchase is interesting because Mr. Hersham left Coinbase several years ago, so he is no longer a company insider, strictly speaking, though he does retain a board seat. He is not the only investor topping up their holding in Coinbase. Cathie Wood's ARK Investments added a further 57,200 shares to its portfolios. Coinbase is trying to diversify away from a reliance on retail trading flow, and part of that strategy is expanding the services that the Coinbase wallet offers to clients. Coinbase has added BNB Chain and Avalanche connectivity to its wallet, which Coinbase claims will allow users to access thousands of additional coins and tokens well beyond those that are listed on the exchange. We note that Coinbase shares have rallied by 7.13% over the last 5 days. One of Coinbase's largest rivals is reportedly shopping around for brokerages. FTX, which is run by billionaire Sam Bankman-Fried, is said to have met privately with at least 3 brokers, having announced last Thursday that its U.S. business would shortly offer commission-free trading on stocks via the FTX app. The story is made all the more intriguing because of Mr. Bankman-Fried's personal 7.6% stake in Robinhood, which may or may not be one of the firms that FTX has been talking to. Robinhood has a market cap of some $8.77 billion, whilst FTX was valued at as much as $32 billion in January, following a $400 million Series C funding round. Though in light of the recent sell-off in cryptos, that figure would now presumably be subject to a significant discount. Fred Hersham's Paradigm Partners was one of the institutional investors in that funding round, alongside Singaporean wealth fund Temasek and Japanese tech investor SoftBank, the sort of connections who could help fund an outright purchase of a broker by FTX. Wall Street banks have had a checkered relationship with cryptocurrencies, although several have, or are in the process of, setting up divisions to offer crypto trading and custody to their clients. However, it seems that the banks are not so keen on the idea of CBDCs, or central bank digital currencies, which they believe could undermine the current banking system. The U.S. Federal Reserve recently asked for comments on the future potential of central bank cryptos, in response to which Greg Baer, a lobbyist on behalf of the Wall Street firms, said that current research overwhelmingly undermines the purported benefits of a CBDC and instead indicates that a CBDC would seriously disrupt the financial system, significantly harming consumers and businesses. Whilst the American Bankers Association predicts that 71% of banks' current funding is at risk of moving to their Federal Reserve if it deployed a digital dollar.